Welcome back to Explain the Charts. Today we're diving deep into Meta stock, Meta, analyzing the recent news and chart data to see if it's a buy, sell, or hold right now. We're focusing on the current market sentiment and technicals to see if we can identify any key price levels to look at and try to determine if Meta is setting up for a bullish or bearish run in the short and long term. As we all know, Meta, the parent company of Facebook, Instagram, and WhatsApp, has been a major player in the tech space, and their stock has been making headlines for its recent performance. Right now, in September 2024, Meta is in a bullish trend, with the stock price steadily rising. There's a lot of positive buzz surrounding the company's investment in artificial intelligence and their recent earnings report, which exceeded expectations. But there's also some negative news about the company being sued in Kenya over content moderation practices. All of this is definitely impacting the stock's price movement, so let's take a closer look at the charts to see what they're telling us. Let's start with the daily chart of Meta. The overall trend is clearly bullish, but we're noticing some consolidation and potential resistance around the 560 level. This level has acted as resistance in the past, so it's something to watch closely. If the price can break through 560, it could indicate further upward momentum. However, if it fails to break through, we might see a pullback or consolidation. Now, let's zoom in on the 1-hour chart. Here, we can see that the recent price action has been a bit more volatile, but still generally bullish. We've got a few support levels to look at, around 550 and 540. These levels have held the price up in the past, so they're worth noting. Also, we've got a key resistance level around 555. If the price can break through 555, it could signal a move towards the 560 resistance level on the daily chart. Looking at the 15-minute chart, we can see even more detail and get a better understanding of the current market sentiment. In the past hour, there has been a spike in volume, indicating increased trading activity and potentially heightened interest in Meta. This spike in volume is likely correlated with the recent news about the company's earnings report and legal challenges in Kenya. We can see that the price has been fluctuating around 560, so we're still in that area of resistance. As a reminder, this is just technical analysis based on the chart data. There are many other factors that can influence a stock's price, including macroeconomic conditions, overall market sentiment, and even investor psychology. It's important to consider all of these factors when making trading decisions. Meta has been in a bullish trend for a while now, but it's worth noting that the stock is still relatively volatile. The recent news about the lawsuit in Kenya could impact the price in the short term, as investors might be hesitant to buy into a stock with legal issues. But if the company can address the legal challenges effectively and continue to deliver strong earnings, the stock could easily continue its bullish run. So, what should traders be looking for? First, keep an eye on the 555 and 560 levels on the daily and hourly charts. A break above 560 could indicate a sustained bullish run. A break below 540 could signal a pullback or a more significant bearish trend. Second, monitor the news and events surrounding Meta, especially any updates on the legal challenges in Kenya. If the company can effectively resolve these challenges, it could boost investor confidence and support the bullish trend. Third, pay attention to the volume. Increased volume can indicate heightened interest in the stock, which could lead to stronger price movements. However, be wary of high volume during periods of volatility. This could signal panic selling or buying, which might not be sustainable in the long run. Remember, trading is risky and past performance is not indicative of future results. Always do your own research and only invest what you can afford to lose.